Peak Wealth Management proudly presents the Trust the Plan podcast with Nick Hopwood and Jim Pilat, where we believe by providing education and guidance, we can help you retire with peak confidence. Now, here are your certified financial planners, Nick and Jim.
Welcome everyone to the Trust the Plan podcast. I am Jim.
And I'm Preston.
We're taking control of the podcast today while Nick is out of town doing some CE courses and stuff like that. So hang on, everyone.
Yeah, you get to see my face this time.
All right. Well, I'm going to give you a chance to be to see how accurate your prediction is, because this podcast is probably going to come out after the Super Bowl, but it is Super Bowl weekend. So who do you think is going to win?
It's tough. If I was going to put money on the game, I would say the Chiefs.
Yeah.
I just feel like they're an unstoppable force, even though I really don't want the three-peat. I don't want to hear about that forever. But,
right.
I'd say they're probably going to win.
Yeah, I think the conspiracy theorists would probably agree, right? There's been so much talk lately about the Chiefs and the refs, and everything goes their way all the time. So
right.
I don't know. I'll hop on your bandwagon and say the Chiefs are probably going to get it done this year. So by the time this comes out, we're either going to look smart or dumb.
Yeah, hopefully dumb. I'm going to say hopefully I look dumb.
There you go. We'll take it. All right. Well, today we thought we would do a podcast on kind of a current events one, right? At the same time, again, we're pre-Super Bowl here, and a lot of the talk in the news has been tariffs. They're on, they're off. It's Social Security. Are they going to cut it? Medicare. All these different things keep popping up, and some people think it's great, and some people think it's terrible, and they're terrified. So we're going to dive in a little bit and look at some history and see what history has to say about this type of thing.
Yeah.
This is what you're seeing behind us. If you guys are watching on YouTube, this is a chart we came across. This is from Carson Wealth. Ryan Dietrich over there puts out a lot of really good information. And I thought this chart was great and really timely. So what this chart is basically showing us is over time, all of the different things since the 1900s that we viewed as a big deal, and it's different this time. And, it's this dramatic event, and but we look at the overall trend of the market, and what do you notice when you see it, Preston?
Long-term trend looks very good. That's what I noticed.
Right. There's blips on the radar, but we know the long-term trend looks pretty good. So I found it interesting even to look at parallels. If we go back and look at some of the really early ones in the 1900s, San Francisco earthquake, natural disasters, right? Hurricanes, stuff like that. We were dealing with these natural type things back then, and it would shake the market, but the market rebounded. Even looking back, 1919 pandemic, we're seeing same kind of things with that. If we fast forward to more modern day, right, where we talk about COVID and swine flu and all these different things, we look back into World War I, World War II, Spanish Civil War, Pearl Harbor, Korean War. There's all kinds of wars and conflict, and we see that in all these things they take their toll on the market. There's a blip, and it's down for a little bit, but again, trend tends to come back. Even assassinations. JFK is assassinated. We saw there's an assassination attempt on Trump. Political controversy. Watergate is in there. There's economic things like the S&L crisis, Black Monday in 1984 when the market went down so much. When people were experiencing these things, they felt like it was different this time. They felt like it's this is a really bad thing. We got to get out of the market. We got to panic. We got to react. We got to do something. And then bad markets as well. We talked about Black Monday, S&L, but like the tech bubble, 9/11. That was a market event and a political event. Swine flu, COVID-19. We talked about those. Taper tantrum, where the Fed was, interest rates were such a big topic at the time. So that I just found that really interesting to go back and look and start drawing some comparisons to those things. So what do you think, Preston, when now here we are again in 2025 and there's all these reasons to panic, right?
Yeah. And I come back, again, we just said the chart, the long-term path of it looks fantastic. It's worth saying there are blips on the radar. Like I think you mentioned, at certain times the market does go down, but over the long term, if we're investing for the long term, we know it's going to go up. So we shouldn't let a news headline today derail our entire investment plan.
Yeah, I think that's really well said. I've even had some clients say, Social Security, they're in there messing with Social Security. I need to claim it before I don't get it, and they take it all away. Like, what would you say to somebody who falls into that camp?
Someone who's already able to claim it, I would say I wouldn't have any worries about them taking it away. Frankly, if whoever proposes taking away Social Security from people who can claim or have already started claiming, like that's political suicide. You'll have riots in the streets. So I think if there's any willpower in Congress to start making adjustments, it's going to be, people my age are going to be the ones affected, whether it's we pay higher tax today or the benefit that we're going to get is less than what we're currently being promised. But I don't think they'll go and impact somebody who's already 60, 70, 80 years old.
Yeah, I think that's probably pretty likely that you're correct. I mean, there's no surprise that Social Security needs some tweaking and some fixing. Maybe it gets tackled here soon, maybe not. We don't know, but I think that's probably an overall pretty good assumption is that it'll affect younger people younger than 50. Maybe they change some of the rules, and that's kind of what we've seen in the past.
Right.
And then as far as, what about the people who just said, I just want to wait out the tariff thing. I don't want a trade war. I don't want to lose any money. How do you feel about that?
That leads right into what I was just about to say is when you look at the events on this chart, there's like major worldwide historical events where in that day, when you read the news headline, you're like, oh, the world is ending, right? Like 9/11, World War I, World War II, like all of these things where if you were there in the moment, you would be like, the world as we know it is over. Right. And we still made it through. We still, over the long term, did well in the market just by maintaining the investment plan. So, not to downplay what's going on today, but when the news headline is tariffs, but we've survived things like 9/11 and major world
We've
wars.
even survived tariffs in the past, haven't we?
Right, exactly.
Like it was, it's scary, and the news can do a really good job of kind of riling everybody up. But everything we're going through, we've seen before, know. And I think this chart does a good job of kind of explaining that. And even though there's temporary pullbacks at times, accounts go down. If we fast forward all the way to the far right of this chart, we're sitting pretty much at an all-time high. So as long as you stayed the course through that, you came out better.
Yeah.
So, yeah, I think the takeaway. Whenever we look at investments, and even if we just have a gut feeling the market's going to go down, we have to ask ourselves, well, what if we're wrong? What if it doesn't go down? What if we get good news and the market rallies and we miss that rally? There's lots of things that show, missing rallies is just as, if not more impactful than staying out when the market was down. Because guess what? If you try to get out when the market's down, what are the chances that you're going to get back in at the very bottom? Right? I've seen this through all these different things, the tech bubble and the financial crisis and all these things. And everybody, it's down. They feel enough pain. They finally get out. Then the market comes up and up and up, and it goes all the way back up to where it was before. And they say, okay, now I can get back in. We just missed all the rally. Like we missed all the return. So,
yeah, it's very hard to, once you've made the decision, I'm getting out of the market, I'm putting all my money safe. Again, what if we're wrong? What if the very next day a favorable news headline comes out and the market's up 2%? From working with people, we know behaviorally there's no way you're jumping back in after a 2% rally because the thought process is it's going to go down more.
Right.
Like I'll wait for it to go down more.
Right. And then it goes up 2% the next day.
Right.
The next thing you know, that's what psychologically can happen. So that being said, there are people that, it's always a good time to revisit risk tolerance. It's always a good time to revisit time horizon. When do I need the money? And if you do need the money soon or you have it earmarked for something, maybe it is a good time to de-risk a little bit and to take some profits. The market's at highs. That's really the time to revisit your risk tolerance, right? Is when the market's at highs, not when it's in a free fall.
Right.
So it's always worth mentioning that, and but it always just takes me back to time horizon. When do we need the money? How old are we? Those are really important questions to ask. So yeah, I feel like the takeaway is there's always going to be something scary out there. There's always going to be some fear headline. Don't let fear dictate your financial decisions. Don't let it force you to turn on Social Security sooner than you want to, and now you're stuck with a lower benefit the rest of your life. Don't let it make you pull out of investments that you really just don't need to pull out of because you don't need them for 15, 20 years, and time is on your side. So that would be my takeaway. You have any closing thoughts for us?
No, I think that was very well said. And just like you pointed out, today we are essentially at all-time highs. So if you want to revisit risk tolerance, that's definitely a conversation we can have. But again, wanting to make changes on the margin rather than wholesale liquidations.
Yeah, sounds great. Yeah. So if you or anybody would like to review their portfolio in light of current economic and political environment, we'd be happy to help. You can always go to our website, peakwm.com, and schedule with us right online there. Thank you very much.
Peak Wealth Management thanks you for watching and listening to the Trust the Plan podcast, featuring certified financial planners Nick Hopwood and Jim Pilat. If you enjoyed our program, please subscribe and share. If you'd like to learn more about our services, please visit peakwm.com. peakwm.com today. See you next week.